Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Hunt JB Transport Services Inc. quarterly report. JB Hunt Transport Services, Inc. offers a diverse range of businesses and services across the United States. These include surface transportation delivery services, logistics solutions, intermodal freight solutions via JBI segment, dedicated contract services via DCS segment, freight brokerage and transportation logistics via ICS segment, flatbed, refrigerated, expedited, and less than truckload services, dry van and intermodal solutions, online multimodal marketplace logistics management for customers to outsource their transportation functions, final mile services, FMS, delivery services. The company operates through 5 segments: intermodal, dedicated contract services, integrated capacity solutions, final mile services, and truckload. The stock price of JB Hunt Transport Services, Inc. has dropped by -6.65% over the past year, primarily due to several financial challenges and market conditions. The company's disappointing fourth quarter 2024 results, where revenue and profit missed forecasts, contributed significantly to this decline. A challenging freight environment, characterized by a freight recession and macroeconomic uncertainties, also posed headwinds for JB Hunt throughout the year. Financial challenges, including higher interest expenses and reduced revenues across its segments, impacted profitability and led analysts to become more conservative in their expectations. Concerns about the company's liquidity and rising operating expenses further weakened investor confidence. Additionally, some analysis suggested that JB Hunt was trading at a rich valuation compared to peers, making it less attractive. However, the stock experienced a significant surge of over 22% in mid-October 2025 after reporting better-than-expected third quarter 2025 results. Despite this improvement, JB Hunt shares remained lower year-to-date due to the overall negative trend over the past year. The primary drivers of revenue growth or decline are primarily influenced by changes in customer demand, productivity, and market conditions. Key factors contributing to revenue growth include increased load volumes in JBT and ICS, as well as productivity increases in DCS. Conversely, revenue declines are largely attributed to decreased customer demand in FMS and overall volume decreases in ICS. Net income and profit margin changes. A shift in revenue quality. The company's net income experienced a mixed trend, with an initial increase of $18.6 million due to reduced operational expenses. However, this growth was short-lived, as net income decreased by $6.6 million, primarily attributed to decreased customer demand and internal efforts to improve revenue quality at the FMS segment. Profit margins also underwent changes, with the ICS segment witnessing a decline from 17.9% to 15%. The consolidated operating income saw a slight decrease of 0.4%. These fluctuations indicate that while operational costs were reduced, revenue growth was hindered by decreased customer demand and internal efforts to enhance revenue quality. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. The net cash provided by operating activities has increased by $120 million, from $1.17 billion in 2024 to $1.29 billion in 2025. This increase suggests that the company is generating positive operating cash flow, which is a key indicator of financial health and stability. The company's financial summary reveals mixed signals regarding its debt level and interest expenses. While the outstanding borrowings remain unchanged, with previous term loans paid off, the average interest rates on revolving lines of credit and senior credit facilities have been disclosed. Notably, net interest expense decreased by 13.9% in one instance, but increased by 2% in another. Overall, there is no clear indication of a significant change in debt level or interest expenses. The company's financial performance varied across different segments and regions in the recent period. The DCS segment stood out as a strong performer, with a 2% increase in revenue and a 9% rise in operating income. On the other hand, the FMS segment struggled, experiencing a decline of 5–10% in revenue and a significant drop of 42% in operating income. The ICS segment also underperformed, with a slight decrease in revenue and a reduction in operating loss, although it remained negative. The JBT segment showed mixed results, with a 10% increase in revenue but relatively flat operating income compared to the previous year. Overall, the company's performance was uneven across its segments, with some areas showing improvement while others faced challenges. Management's outlook on company strategy. According to management, the company is anticipating a somewhat seasonal business outlook. Despite this, they are confident in their ability to meet operating and capital requirements due to sufficient funds provided by liquid assets, cash generated from operations, and revolving line of credit. In terms of strategy, management has authorized plans to purchase up to $1 billion of common stock, indicating a focus on shareholder value. Additionally, the company expects to spend between $550 and $600 million in net capital expenditures for 2025, suggesting investment in growth initiatives. The new U.S. tax legislation is not expected to have a material impact on earnings, and management has successfully recovered most fuel price increases from customers through fuel surcharges. Overall, management's outlook suggests a cautious, yet optimistic approach to the company's future prospects. There were no notable acquisitions or divestitures in this period. The company's financial strategy focused on organic growth and internal development rather than external transactions. The company has demonstrated a commitment to returning value to its shareholders through two key initiatives. Firstly, it has declared regular quarterly cash dividends since 2025, providing a steady stream of income to investors. Secondly, it has implemented a share buyback program, authorizing the purchase of up to $1 billion of common stock in August 2024 and subsequently purchasing approximately shares for $1 million by September 30, 2025. That concludes the financial summary for Hunt JB Transport Services Inc. Feel free to comment below, and I will be happy to answer them when possible.